Welcome to Optional Forex. Probably I should rename this to Forex Laboratory. Yeah, I've been really playing around different stuff, just fooling about. Yeah, I think that's the main point of me doing this show. Really, I don't want to present something that's really date, more about analysis. I think there's really people doing that already. Yeah, but what I'm interested in presenting is my thoughts, my idea, how Forex can be approached in another manner. Of course, with the help of indicators, I consider those my trading buddies of sorts. They guide me along pretty well most of the time. Yeah. So today's topic, I'm going to actually present to you about Forex correlations. Yeah. So for those of you who are hasty, let me see, should be looking at my screens. Yep. I already uploaded the indicator. Let me see, should be here. Yeah. So this is an indicator I'll be talking about, overlay chart. Yeah. So for those of you who are regulars in this show, you can same link, go in and download. But before that, let me jump in just to highlight a bit about correlations. Yeah, I think this is a concept that correlation we have spoken time and time before, but nobody really dived deep into it. Yeah, neither have I. I mean, the first time I heard about correlation is really about when I first learned with AW. That's about 4.5 years back. Yeah, so I know there's correlation. Then I didn't really visit it much after the course. Yeah, so I was playing with my indicator the other day. Took a break, and then something struck me, and I did some testing, and I got really pretty interesting results. Yeah. So correlation, what are those? Now, correlation, simply speaking, if one pair move, and if there's a high correlation, it should affect similar pairs. Yeah. So to put it in layman terms, I'm sure you all know what your majors are. So anything that is the 8 majors will be your Aussie dollar, Kiwi dollar, Euro dollar being the biggest of them, has the largest volume, liquidity, pound dollar, yeah, so on and so forth. Yeah, so any of the pairs that is paired with USD, usually they are majors. Yeah, so that the 8 of them. Okay, I'm not talking about exotics. Yeah, so Norwegian Chrono, those that we rarely heard of belong to exotics. So just a bit of run through. If the majors, now my hypothesis is that if the majors has the most volume, provide the most liquidity, because they are simply the major, then it makes sense that the minor, so what are the minors? The cross pair, Aussie CAD, Aussie Yen, Aussie Swiss would actually follow Aussie dollar, because Aussie dollar being the major, it sets the price for Aussie, the direction for Aussie. Sooner or later, the minor will follow it. Okay, that's my hypothesis, which I set up to test. And if you look at this chart, Aussie dollar has a positive correlation with Aussie CAD, Aussie Yen, and then Euro dollar. Where's my Euro dollar? You see, this is the power of Euro dollar. It has a positive correlation with Euro Aussie, Euro CAD, Euro Swiss, Euro pound. Yeah. So that more or less actually confirms what I suspect. Not that it was a out of the world suspicion, but I still need to look at something just to confirm it. Pound dollar, it has a positive correlation with basically all the pound pairs, pound Swiss, pound yen. Yeah. So usually for those who are playing with indicators, we need something to what we call double confirm. So I need to go to another chart just to confirm what my suspicion. So this is what I'm using. Let me choose Euro dollar. Let's go with, yeah. So there we have it. So Euro dollar on a 1 hour, 1 day, 1 week. Let's look at all the Euro pairs. I'll just get rid of the exotics first. It's easier to digest. Okay. So Euro dollar against Euro Aussie on a 1 hour time frame. Currently, it has a negative correlation. Daily time frame, it has a negative correlation. On a weekly and monthly, it has a positive correlation. It's 0.36, 0.27. Against Euro Swiss, hourly positive, daily slightly negative. Actually, it's a lot negative. But on the weekly, monthly, 3 months, 6 months, 1 year, overall, it is still positively correlated. Euro dollar against Euro pound, Euro yen, you can see that mostly is positively correlated. Right? So if I choose Aussie dollar, it doesn't have any other Aussie pair. Let me check the exotics. So okay, Aussie dollar, you can see that most of it against the other Aussie pairs, even the exotics, is mostly positively correlated. And then last, let me see, I'll choose dollar pair. Oh, wait, euro. I'll go back to euro dollar again. Let me explain why. Because I don't have a dollar against dollar. Uncheck the exotics. All right. So euro dollar, being that euro is the first one, it has to be negatively correlated with the dollar pair, dollar CAD, dollar Swiss, and dollar yen. And my suspicion is right. Right. The base pair is different. So hence it has to be negatively correlated. And this confirms my suspicion. Dollar CAD, dollar Swiss, dollar yen is negatively correlated with euro dollar. So the first part of our hypothesis is more or less proven. Now the next part, which is the interesting thing, I'm going to refer back to trading view. Okay, please don't fail me. All right, and this is the chart that I have. Let's look at Aussie Kiwi. So on trading view, for those of you who have trading view account, how you do it, just go to the plus sign on top. Wait a minute. Aussie Kiwi screens. Yep. So you should be looking at my trading view chart. All right. So for those of you who want to do double panel, just go to your plus sign, search for the pair. So in this case, I have Aussie dollar, and then you just add it in. So you have this. All right. So you can see on the wider picture, big picture, Aussie Kiwi and Aussie dollar, their movement are quite similar. Okay, let's scroll back a bit. You can see are quite similar. We don't have too much of a difference. Okay, there are ebbs and flow, and this is actually what I am zooming in. Okay. So let's look at CAD Swiss. So dollar CAD and CAD Swiss, it has to be negatively correlated. All right. So if dollar CAD is going down, is on a downtrend, that means CAD is strong. CAD should be on an uptrend. All right. And we can see actually from here, CAD is actually not on an uptrend against the Swiss. That actually tells you another story. Right? If dollar CAD is on a downtrend, that means CAD should be strong. But if CAD Swiss is not showing an uptrend as opposed to a downtrend in dollar CAD, that means Swiss might possibly be stronger than CAD. That's an advanced play of correlation. I will leave it for those of you who understand, but for those of you who do not, don't worry. I'm not going to the advanced play today. I'll be only touching about the basic play. Let's go about Euro Yen. This is where things start to get interesting. Euro Yen against Euro Dollar, it should be positively correlated. Right? Now, Euro Dollar from this part onwards, it is on an uptrend. Euro Yen up to here, it is an uptrend, no problem. Now, my issue comes in when Euro Dollar is on a downtrend, Euro Yen should be on a downtrend. If it's not on a downtrend, right? That means it's either on an uptrend or ranging. That's our reversal. We can trade a reversal play. That's my hypothesis. That's where I'm coming in. All right, so I'll repeat again. Against a major, a minor should more or less follow its direction. So if you scroll back, looking at the big picture, it should be that way. They don't diverge a lot. Okay. Their movement should be more or less the same. Now, if at any one time you find that the minor has diverged against the major, you can begin to suspect a reversal may be at hand. And I'll tell you, and I'll give you a very, very strong example. Okay. Silver and gold. Okay, let's look at silver and gold. Okay, so I have my gold chart below. So if you look at gold currently from last year, August to now, is on a downtrend. I don't think anybody will actually suspect that. But if you look at silver, it still has not begun its downtrend. According to correlation chart, or according to what I'm presenting now, you can actually make a reversal play. Now you can actually trade off horizontal level, which I think is one of the safest bets. Price action, most of you should be able to do that. Yeah, or just simply wait for the next lower high. You can trade off a reversal play. And if you scroll back from gold and silver, you can see enough of that happening. Okay, let's start. I've marked out some point of the charts. All right, so this is the first point. Really, really interesting. All right, so going in, gold over here has a downtrend. Silver has a downtrend. Gold begins on an uptrend. Silver also on an uptrend. You can see that they are positively correlated. Gold and silver usually they move in tandem. Right, you can see that both charts move in tandem. They don't diverge a lot. Now, when price diverge, you can see from here, gold hit the horizontal level. I don't care about range. I'm directional trades. I'm going about directional trades. You can see that gold starts to give you a lower high. Second lower high. The first lower high is always tricky to trade. That part I admit. But the second lower high should give you a very, very strong confirmation. And this is what you have for silver, trading off a double top. Very beautiful trade down. Right? And eventually, like I mentioned, the minor should catch up to the major. All right. In this time round, I'm using gold as the major because I would say that gold has more volume, more people playing it compared to silver. Now, another divergence in price that came up. So you can see from gold here, it makes a bottom ready. So obviously when it makes a bottom, we don't know. But once price makes a bottom, it gives you a higher low. And just now, like I mentioned, the first higher low is always tricky to trade. Wait for the second. And there we have it, the second higher low. Okay. Be it a lower high or higher low. A second one will always, in my humble opinion, I would think is always easier to trade from. And then you see your silver having a double bottom, followed by a higher low. So for those of you who are daring enough, you want to trade a double bottom directly, be my guess. For those of you who want to wait for a confirmation, then your higher low will come in. And what happened next is that, oops, I gotta clear my annotation. Clear our drawings. When gold rallies, silver eventually follow. So be whether you trade really at the bottom because of the double bottom or higher low, you do catch a pretty good pips. Okay, you can see that eventually silver follows the flow of gold. Right? Price don't diverge too often. And this is the recent one that we have. Gold giving you higher low, lower high, lower high. Again, silver makes a play on double top. So this is a trade that can be caught using correlation. Yeah. But I stress that this is not a trade that you can make every day or every week. Such trades probably come once every 2 months, 3 months. Yeah, very, very strong divergence of price with a correlation play. But if you manage to catch it, I would say it gives you really, you can literally trade at the utmost, almost the top and bottom of a reversal. Yeah. So let me revert back to MT4. Where's my MT4 here? Just need to check. Yep, there's my MT4. Very nice. Now this was a trick. Okay, so for those of you who have downloaded the indicator, I don't know whether, I mean, why you can actually put the link on it. Put it file data folder in your MT4. Go file data folder, MQL4 indicators. Just plug the indicator in. For me personally, because I have too much indicator, I usually create folders. Yeah, I put it in those folders. Close your MT4, refresh, restart. Start our MT4 again. You should have the indicator popping up. Now, this is what I need you to do. This is the indicator that we are playing around with today. That's the overlay. Yeah, I will get rid of that. When you first put in the indicator, which is the overlay, this is the options that comes up. Right. By default, it displays $yen, your bull and your bear color, Greeks. Now, if everything you just click OK, this is what you will see. Now, I don't really need the Greeks. I think it's a distraction to me. So every time what I do is, under Greek color, I'll put it as none. I don't need to see the bar color. Really, what I need to see is the ebb and flow of the chart. This is a Aussie Kiwi, so I should be pairing it with Aussie dollar. So Aussie dollar being the major pair. All right. So again, I'll repeat, my hypothesis is that the minor should follow the major. All right. So whatever overlay chart you have on should always be a major pair. And this is what you get to see. Where's my chart? Did I put it wrongly? I put it as none. Sorry. It should be black. Okay. This is what you should see on your chart. Yeah. So is this part clear? All right, I hope you're clear. This is just some simple settings. Put in over the indicator, which is called overlay chart. That's all you need to do. Now, next thing is, how do I play with this indicator? Same with what I have done on TradingView. Okay. Look at the big picture, and this is actually a chart I posted live last week on ATW Telegram group. So what I did was that, I think my analysis at then was, the black chart, the black bars are actually Aussie dollar. It was on an uptrend at then. No question asked. Sorry for the crude drawing. Aussie Kiwi on an uptrend, right? Now, here's the interesting part. I actually noticed that Aussie dollar began forming lower high. So that's my first suspicion that since the major has formed a lower high, and at that Aussie Kiwi didn't form a lower high, there may be a reversal at play. There can be a reversal at play. And if you look at Aussie dollar now, where it is now, it has formed actually a double top, and Aussie Kiwi is actually forming a lower high. That's a very strong signal for me to trade Aussie Kiwi short. Unless Kiwi is weak at the same time, then this play won't be possible. Yeah, but let's go for the basic version. Minor should always follow the major. If the major goes for a downtrend, signals a downtrend signal, the minor will follow sooner or later. Right, and that's my Aussie Kiwi play. If you look at a pound Kiwi, all right, so I have pound Kiwi and I slap it over with pound dollar. Yeah. This is actually what's happening now. All right, so you can see that pound dollar is on the downtrend. Recently, it makes a higher low, and now it's possibly on the double bottom. Pound Kiwi has actually followed suit earlier. Now, if it's following, there's nothing for us to play about. Okay. What we want to do is when price is not following, then that is where the interesting part comes in. Okay. We want to see price not following the major. When price is following the major, really there's nothing for us to play. Okay, so let's go back a bit. You can see that more or less, I'm not talking about an exact price point. I'm just talking about look at the price behavior over a 1 month, 3 month period. It should follow. If it does not, then there's a play for us. Right? The pound dollar, you can see that over here, there's a very strong divergence in price. Pound dollar is going up. Pound Kiwi is going down. And as what I mentioned, my hypothesis is that the minor sooner or later will follow the major. I'm not giving you exact price point to enter. That's really up to you. I'm not talking about strategy. I'm talking about a concept. How you want to enter is really entirely up to you. I may be able to provide some clues later on. Right. So I'm just teaching you how to spot this. Right. Dollar Swiss, for the dollar pair, okay, dollar Swiss, dollar CAD, dollar yen, you should really overlay with euro dollar because there's no dollar dollar. Right. But once you overlay with euro dollar, in the indicator, there's a mirroring, right? Because dollar something, it should be the inverse of euro dollar, right? Change your mirroring to true instead of false, right? If it's false, it will be hard for you to check actually. What did I do? Did I close my chart? Oh, no. Right. So if it's not mirroring, then you see price diverge all the time. But because it's the dollar Swiss, dollar CAD, dollar yen is the inverse of euro dollar, switch on the mirroring. It'll be far easier for you to spot a price divergence if there are any. Right, and this is what you should see. You see overall in the big picture, it should follow. Now here's the interesting part whereby I find when I overlay my correlation chart. Okay, let's see if I can find a price divergence somewhere. Something that's really obvious. Downtrend, slightly uptrend, price follows, nothing out of the blue. Nothing out of the blue, all seems normal. Dollar Swiss don't have it. Let me look at dollar yen. Dollar yen against euro dollar. Wait a minute, I just look at pound kiwi. It should be easier for me. Sorry, my bad. Now this is actually what I realized when price diverge. In order to find an exact trading point, probably I'll zoom in on this. So over here, from 15 Fed onwards, you can see that pound dollar is actually on an uptrend already. Ironically, pound kiwi is on a downtrend. Really, I don't care about the fundamentals. Again, back to my point is that pound kiwi sooner or later should follow pound dollar. And since pound dollar is on an uptrend, pound kiwi should resume on an uptrend. Now, pound kiwi actually reversed only at 10. Is there any way for me to determine, rather than a 50-50 coin toss, that I should trade reversal here? There seems to be a way. You can actually zoom in on a chart and doing an overlay. If you realize when pound dollar actually reverses, the point whereby it reverses, that means at its bottom point, I don't know if it's a trick of my eye. I need to really look at more charts, but this is something that I'm excited about that I want to share with you all. At the exact same low, when I overlay my chart, it seems that the minor is also where it will begin to bounce off. This horizontal level is actually formed by the major. And when I bring it over to the minor pair, which is pound kiwi, it actually begins to reverse. That's a very interesting phenomenon. All right, so let's look at this part. Pound dollar goes on a downtrend. Pound kiwi is on an uptrend. right? So pound dollar actually begins to reverse first. Look at where pound dollar reversed. And look at where pound kiwi begin to reverse. Didn't reverse a lot. This will be the lower high. Very long wick. I love to trade wicks. Very strong rejection for me personally. And price actually went down. Now this wasn't in a sense, it wasn't a true total reversal, but we'll still have made plenty of pips in that particular move. It really interests me to no end. Boy, I can tell you that this will probably be one of the possible next trading strategy that I may concentrate on. Yeah. Again, if you look at this, objectively speaking, pound dollar is on a downtrend already. Suddenly, pound kiwi spike up. I have no reason why. I don't understand. It should follow the pound movement of pound dollar, but for this period, maybe some fundamentalists can tell me why pound kiwi rise up. But look at where it begins to reverse, which is very, very true for that. Oops, what did I do? Again, a horizontal level that is formed by the main chart across. And that's where actually price reverses. If you do all your own back testing, scroll back enough charts, you need probably about sample size of at least 100 just to confirm it, and then probably a couple hundreds more just to give you a reliable back testing data. I have a strong suspicion that there is this play that may come in. I mean, you can make your life easier just to go down to the hourly charts, H4 hourly or 30 minutes. But before any of you do that, my warning to you is that the daily would be a better time frame to trade correlation play. The smaller the time frame, usually it goes out of whack quite easily. Yeah, but again, the smaller the time frame, you should be able to, if you really trade the exact reversal point, the risk to reward, if you allow it to run, should give you massive, massive returns. I'm talking about 10:1, 20:1, this kind of massive returns. The small time frame should offset the multiple winners that you the multiple losers that you encounter. Right? So this is a very simple indicator, very simple concept that most of us are exposed to during our early stage of learning, correlation chart, sorry. And I find that it can be actually used in a very meaningful way during my back testing process. Yeah. So I hope this actually benefits you all. Look, I totally understand that correlation is something that cannot be learned in a day or two. If you are interested to understand more about correlation, I highly emphasize that you go do your own self-study, find out more about, probably rewatch my video, this particular video, 2-3 times, you will actually form a better idea. I promise you that. All right, correlation play, I would say requires a deeper understanding. All right, but once you have that, and if you are able to see what I just presented, life will get interesting for you, for those who are really interested in trading reversals. Right. I've actually spoken to Ash, and he made another interesting point. COT does give an early indication, and it serves as a confirmation to what I just said. Now, I'll actually find out more from Ash, and he got me really fired up. Right. So with that, thank you all for joining me today. Seriously, I urge those of you who already understand trend, price action, price structure, or whatever that is, and you're a bit, and you just want to push on with your trading and explore reversals, play with this. I'm sure over time, you will find some really, really interesting results that you can make use of for reversals. I have a very strong conviction on that. All right, with that, thank you for joining me, and I'll see you 2 weeks later. Goodbye.